please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh, with me Surabhi and Anuj, and looks like today we are prepared for both sides. A shade of pink and a deep shade of green. Well, at the moment the Asian markets are giving us a shade of pink, not just Asian, even Wall Street. Tax troubles, probably gradual. Japanese industrial data, Chinese PMI, all of them are a little bit under the weather. But then the point is, we've not been uplifted by global tailwinds, nor have we been bothered by global headwinds. If you only take the Nifty, perhaps there'll be a little bit of a negativity from the metal stocks, especially Tata Steel. I mean, after all, it was priced to perfection. So to some extent, there could be disappointment. I think that'll be more than countered by Axis Bank. That's what investment banking sources told us. Axis itself is rubbishing it, but this looks like, I mean, I could trust these investment banking sources. That conversation is happening. So that will hold up the Nifty bank and some part of the Nifty as well. See, the point is the market is in a bull grip. So I'd really leave it to Anuj to, expound this further.
Well, good morning, Lata. I hate to be the one always pointing out the niggling worry, but I mean, I'll just go back to the price of oil, because one was watching whether this is going to be a fleeting sort of moment. But it's sustaining above 60. The talk is very, very clear. I mean, it's OPEC plus Russia. They're all talking about extending production discipline. So all of that is keeping traders on the edge. And the price of Brent oil has moved up about 37% if you look at it from the lows of the year, the June lows. So it's been quite a stunning rally.
Absolutely.
Anuj, now, morning. I guess we can always counter it by saying it's actually good for stocks. These days, stocks like Reliance, Oil India, they move higher. ONGC, they move higher with oil prices higher. But I guess we can't discount the fact that at a macro level, it's a slight niggling worry.
Morning, Surabhi. I'm a very positive person, and in the morning, I like to look at things positively, whether it's oil prices, whether it's Tata Steel. And I think it hasn't helped looking at the negatives. I mean, at some point, of course, it will bite you. But the fact is that the market is in control of bulls. And there's a big rally on in portfolios right now. And our own mutual fund portfolios have done so well. I was just looking at, my portfolio, for example, yesterday, and it's done decently well.
Yeah, feels richer every day, I must admit.
It's paper wealth, of course. But anyway, the Nifty is up 6% this month. The mid-cap and junior is up 8%. When the junior index is up 8%, you know that good stocks are doing well, and that's what you need, right? The last high of 10,150 now for the market has become the floor, and that's what the market's template has been. It makes higher high and higher low, and the last high then becomes the major low for the market. That's also the 20-day moving average. I'm not saying that goes there, but if it does that for some reason, that would be the perfect buying opportunity. I think the niggling worry for the market has been the bank Nifty, because that's struggling or making heavy meal of 25,200. But of late, yesterday, for example, HDFC Bank and Yes Bank showed signs of bottoming out after the recent correction. They ended at high point. Reliance remains the go-to stock, and as you pointed out, oil rallies, Reliance rallies yesterday in late trade, that ended at high point of the day. And I tell you something, I know Tata Steel could start in the red, but I won't be surprised if it ends in the green. And Tata Steel could actually provide a re-entry opportunity in metals, because the call that you need to take in metals is the cycle over, or is this just a one-quarter blip? If it's just a one-quarter blip, in that case, that would be used by bulls to really pile on. And the sense you get is if you are still in the middle of the cycle, in that case, you won't worry about, one-quarter disappointment of 4 or 5%.
The point that Ashwini keeps making, you must sell out of Tata Steel when it posts an absolutely astounding result.
Exactly. I think that time, we are far away from that. I mean, if Tata Steel had to top out, it would have topped out on the Threessen Group deal day. It's taken that out and has moved on. I think today, if there's any weakness, keep in mind it ended with some losses yesterday as well. And if it loses some more, of course, Nigel will talk more about it, but it could well be a re-entry opportunity.
Okay, well, we're going to watch out for the market's reaction to those numbers. Of course, the only niggling worry, if you want to sort of look at that, is that data points from China this morning, as Lata pointed out, aren't very optimistic, but it's sort of, incremental data for now. Okay, so let's then look at what our wise experts have to say going into trade this morning. Jim Walker of Asianomics says the announcement last week that the government will at last bite the bullet on banking sector recapitalization should change the growth trajectory of the economy over the next 12 months. He says they were all set to go underweight Indian equities for the first time since October 2013. But Mr. Jaitley has saved the day. He says the next 12 months will still be disappointing, but investors should look through the immediate term and towards a renewed growth upcycle starting in 2019, just in time for elections. That's a bullish call coming in from Jim Walker.
There's a bearish call on bonds, and that's naturally because of crude. This one comes from Bhaskar Panda of HDFC Bank. Says the dollar index gave up on some recent gains as news of Manafort hit the wires. He says the USD INR pair may not get too affected by it as support comes in around 64.75, 64.80 levels. He expects the pair to trade with a range of 64.75, 65 today. It's not the rupee. Actually, the more interesting is the bond call. He says that the 10-year benchmark bond yield has moved higher, is now within touching distance of 6.9. Expects yield to trade between 6.87 and 6.90. Well, actually, it's this crude at $61, and therefore, you know, I'm not sure 6.9 will happen. I'm sure people are rushing in at 6.88 itself, but nevertheless, this is the worry for the bank nifty.
I was just coming to that. So, I mean, I don't know, NBFC stocks, could they be under the weather a little bit because the price of money, at least on the screen, it's not
higher. Just on the screen. It's definitely moving higher. See, it's inching higher. If you're raising a debenture today vis-a-vis what you raised 6 months back, you obviously have to pay more. So incrementally, it's getting tougher. And you know 6 months down the line, the public sector banks are going to genuinely crash rates. You know, they have been keeping a margin of 300 basis points, and they will want to bring it down when they are comfortable with capital. So incrementally, the world is becoming tough for NBFC. No two ways about that. That doesn't mean money will not flow into NBFCs.
Okay, let's now go across to Mangalam for the world view.
A fair amount of red on the global screen, starting from Wall Street itself, 0.33% cut seen on the frontline indices out there. That is on the back of reports that the tax plan could perhaps be more slower than expected. But remember, a slew of earnings this week coming in from Wall Street. We have Apple, iPhone 10 sales have been hitting through the roof. Starbucks as well as Tesla report their numbers too. So that is something the street will be watching out for, apart from the fact that the US Fed meet for 2 days begins today. Across the Atlantic, a bit of red is in the European indices as well, the 3 frontline index. But the adventure index of Eurozone has been the Spanish IBEX. Remember the 3 friends who went on an adventure trip to Spain in Zindagi Na Milegi Dobara might as well invest in the Spanish index, because that has been yo-yoing over the last few days on the back of geopolitical concerns out there. Oil has been hitting highs, so the Russian index up about 0.5%, Brazilian index though down about 1.6%. Across the Asian screen, a bit of red too, coming in from the Japanese data as well as the Chinese data that came in below expectations, and the SGX Nifty indicating a mildly tepid start.
Mangalam, I can just hope I can make it to that place before the makeup or breakup of Catalonia, whatever's happening in Spain. Thank you so much for joining in. Nifty is just slightly negative, just about 7 points down, as you can see out there, knocking on the doorsteps, the futures, that is 10,400. Let's now get stock specific. Our entire team is here, as always, with the CNBC TV 18 morning list of top 10 stocks for the day. Good morning, guys. Anuj, let me start with you. What's on your radar today?
So, first stock is Tata Global. That's a stock which continues to make new lifetime highs. In fact, we talk about the Nifty Junior Rally, and these, stocks like Tata Global, the One Housing, these are really the ones that stand out. 360% jump yesterday in delivery volumes to be at 160 crores. The next one is Dwarikesh Sugar. It's the strongest stock in a strong sector. So, up 24% this month, 141% this year, continues to see delivery buying. And the other stock, the whole chemical space has had a huge rally. Make Money Organics, up 200% this year, 47% this month. And I was just looking at the numbers. It trades at 3 times market cap to sales even after this rally. So, of course, the sector itself has seen a big rally. So, that could be an interesting stock.
All right. Watch out for all that. And Dwarikesh, even after that multi-bagger rally, Mr. Tulsian backed it. So, I mean, that's really proving to be a winner. But today, perhaps casting a slight pall of gloom could be Tata Steel, Nigel?
That's right, Lata. The stock could start off in the red. It appeared yesterday that the street was nervous getting into its numbers. 2 factors you need to track. One is the India EBITDA per ton. That came in at around 11,000 rupees on a per ton basis. Our poll threw up a number of around 12,500 rupees per ton. So that was a bit of a miss. It came in at the lower end of most expectations. And Europe, That, in fact, was where the big miss came in, because the EBITDA per ton came in at $45. We would have liked a number at around $70 to around $75 per ton. That's as per our poll. So that was where the big miss. Brokerages, well, UBS, they have a neutral rating. They're saying there could be some cautiousness because of the big run that we have seen in the stock. JP Morgan, they have an overweight rating, and on these numbers, in fact, they've gone ahead and increased their target price. They're saying steel demand has improved tremendously, and they're saying that all the re-rating is not yet done, so expect the best to come as well, though the near-term reaction, as they're saying, could be negative. Stock starts off in the red. Let's see where it goes from there.
No Credit Suisse report. I mean, they are the ultimate authors of this, or rather ahead of the curve on the metal rise.
That's interesting, actually, Lata. You know, Credit Suisse for the longest time had a 210 rupee, 240 rupee on the stock, on Tata Steel. And when it turned, and then they turned as well. And then, in fact, you know, the target price went to that 700 or 750 odd. But I remember for the longest time, Credit Suisse, and they got it right even on the downturn, actually, because it went to 200 rupees.
I mean, they got the metal turn right, no two ways about that. Okay, but I think the stock of the morning, other than Tata Steel, is going to be BEL.
Well, yes, and on the other side, it will be a dark green for the stock today, given the revenue booking has been really strong. The execution was very good for the company, and the revenue jumped up by 38%. Even if you look at the EBITDA margins, really strong at 24% versus 18.8% earlier. Now, the key question here is the sustainability of margins, because remember, even last time the management had said that sustaining the margin at 17 to 18% is not possible. They had hinted at a number of around 15 to 16%. So maybe this is a one-time number that you're seeing, 24%. Given the fact that the employee cost has gone up 44%, this comes on a very strong footing. The net profit as well jumped up around 19%. Even if you look at the other income, that has come down to just 50 crores versus 170 crore reported last year. So the number is a pure operational beat flowing in from the top line. The order inflows continue to remain strong. The order book at around 41,750 odd crores. So things looking good for BL. The only question here is the execution. But for today, surely the stock is going to hold up in the green.
Oh, yeah, and this is the second quarter running that BL has come out with a solid performance. Thanks, Anisha, for that. Well, then, let's move to the set of stocks that also sort of comprise our big story of the day. And that's the deal that has now come undone. Lata, so IDFC and the Shriram group of stocks, how should we read this? Will there be a fair amount of green? Because at least a section of shareholders were gunning for, higher valuations.
Yes, I mean, this is our source story. Nisha broke the story, but... I have it confirmed from fairly unimpeachable sources that the government wanted, at least 100 rupees on their stock. The market is valuing IDFC at 60 rupees. Their point is Shriram Capital is being valued because it's not a listed stock. It's being valued at on lines which, if applied to IDFC, should give them 100 rupees. And the point is that the long and the short of it is the government put its foot down, and therefore the valuation mismatch and resistance from shareholders of both sides. Shriram, of course, refusing to...
Shriram Transport in particular.
Shriram Transport had a different problem. They didn't want to be a holding company, but I think the deal was getting reworked to keep it listed. Then it would only be a merger of Shriram Capital and IDFC, but there the IDFC shareholder, especially the government, refused to take the discount as they saw it, and therefore now they have walked out. Chances are that, like yesterday, when the news was already brewing, IDFC will continue to take, will continue to trend lower, and Shriram could trade higher, because the market is not valuing IDFC as it believes it needs to be valued. And IDFC desperately needed that retail reach which Shriram could give them. Shriram had much, probably less to get from IDFC, and therefore my sense is red for IDFC twins and green for the Shriram twins. Anuj?
Yeah, I totally take your point, but IDFC has already corrected from 66, 67, now back to 62, so almost I think 55, 56 was the level at where the whole rally had started. And if you take some of the part for IDFC, it has a bank, and also I think at lower levels it will also find some buying.
Yes, and it has a mutual fund which, after the Reliance listing,
exactly.
I agree.
And I tell you something, this could be actually a win-win for everyone once the whole dust settles down. Of course, we'll see that. But Shriram City Union Finance, the SCUF, that I think would be the interesting stock to watch, and maybe even Piramal Enterprises. Let's see. So there are a lot of stocks to keep an eye on. Shriram City Union Finance, of course, the more illiquid one, but Shriram Transport has had a decent rally. But Today is Ekta Divas for Lupin.
Yes, well, for Lupin, you know, Anuj, I would be surprised. I wouldn't be surprised if the stock is in the green as well. I heard the conference call last evening, and it was very cautious commentary by the company about, you know, the US pressure. In terms of pricing pressure, they are maintaining margins at around 21 to 23 odd%, despite everything that's taken place with the US markets, etc. So what I heard from the analysts is that they weren't convinced about the US markets too much, but today it's a completely divergent view which is coming from brokerages. So for example, CLSA has upgraded their stance while Credit Suisse is still cautious. So according to me, it was more caution, and hence probably the stock could probably be in the red, but I wouldn't be surprised just simply based on the brokerages which have upgraded Lupin, and hence maybe we could see probably a little bit of a green tick or a flattish kind of performance despite that cautious commentary.
Okay, all right, Ekta, thanks so much. Maybe people are willing to go over the cautious outlook for this year and already looking at FY20, because that's the year in which the company is promising a turnaround of sorts. Well, let's stick with earnings then. Abhishek has the lowdown on LIC Housing Finance. How was it, Abhishek?
Volume here on this. Very bad set of numbers coming in from LIC Housing Finance. The P&L growth remains weak despite the fact that balance sheet growth remains strong. So net interest margin is at 11th quarter low of 2.38%, while balance sheet growth, that is the AUM growth, is at 8th quarter high of 15.5%. So what caused the decline in net interest margin? The yields. Yields over the last 12 months have declined by more than 90 basis points. When you compare that to cost of funds have declined by 57 basis points. But in the last 2 quarters, that is from Q4 NIMs to current NIMs, the NIMs have declined by 59 basis points. So there's clearly a pressure on the yield front, despite the fact that they are increasing the high yielding portfolio of non-individual shares. So even then, you know, the yield is under pressure. Gross NPA increased slightly to 0.8 versus 0.72. Expect the stock to be in red today.
Thank you very much for that, Abhishek. Let's get to Bharti Infratel. Those numbers are important. Ronit, not quite up to street expectation?
So largely in line sort of numbers coming in for Bharti Infratel. The revenue was up 11% at 3648 crores, which was, you know, near expectations, as well as the EBITDA was up 12% at 1634 crores. Moving on to the PAT, a slight disappointment, came in at 638 crores versus our expectations of around 700 crores. So, you know, largely this was one disappointment, but, you know, the company, the concentrate tower additions came in at 118 versus our estimate of around 300. But the company also said they're looking to increase their stake in Indus Towers, of which they own already 42%. So, you know, on the back of all this, you can expect a slight green on the stock today.
Okay. All right. Thanks, Ronit, very much for that. Well, speaking of telecom and telecom-oriented stocks, Reliance Communication was hitting the headlines once again last evening, because now the company has spoken about a new plan, and the result of that plan, the company claims, is also going to be pay down of all the dues and an eventual sale of the company. Kritika has more details on this one. Kritika?
You know, this was inevitable, Surbhi, but yes, they have finally laid out a plan. The JLF has approved a 17,000 crore rupee repayment plan. They have time till December 2018, but the company and the management has admitted that by December first week is what lenders are looking at as a timeline to be able to convert debt into equity. So that's about 51% stake, which comes up to 7,100 crore rupees of debt being converted into equity. There is a detailed plan that has been worked out. 17,000 crore rupees, they have time till December 2018, yes, but the entire stake sale and asset monetization plan, they are hoping should be complete by March 2018. That's their target. We'll have to see if that does work out. And once the entire equity conversion is done, the new RCOM is expected to have a debt of about 6,000 crore rupees. And yes, they are hoping to be able to bring in new investors. They have confirmed that Anil Ambani will then, after the conversion, be just a public shareholder.
Okay, we should be in a bit, thanks for that, Kritika. We should be able to play what Reliance Communication told Kritika yesterday. In a bit, we'll get you that chat as well. But let us look at Axis Bank as well. Banking sources tell us, investment banking sources tell us that some PE investors are speaking, Bain Capital in particular, to pick up an equity stake in Axis Bank. The bank, of course, is denying this as rubbish, but we have reason to believe that conversations are going on. and I would expect that would be a boost for Axis Bank stock today.
Okay, so from one bank to another. Now, the good news was on Axis Bank. Some not so great news for Central Bank of India. We got earnings yesterday. Abhishek, no sign of improvement?
Well, Surbi, for last 8 quarters, they have been reporting losses and it continues. So, in the last 8 quarters, Central Bank of India has reported about 5,500 crore of net losses. The net loss per quarter has been ranging from 575 to about 900 crores. Even the balance sheet is declining. So, the advances declined by 5% on a YOY basis, while 3% on a quarter-on-quarter basis. Asset quality continues to remain a pain point for the bank.
Yeah.
Gross NPA at 17.3% versus 18.2%. So expect the stock to be in red today. Back to you.
Okay, Abhishek, thanks a lot for that. Let's go across to Sonal now for some other results.
Well, I'll start with the good ones first. LMW, though the revenue was flat, but the EBITDA was around 25% and the profits were up 22%, mainly because the tax rates were lower. Talking about Balaji Amines, the revenue was up at 17%, margins were up 250 basis points, leading to a PAT increase of around 34%. Talking about Allicant Castalloy, revenue was up around 13%, leading to a profit increase of around 41%. So all these 3 stocks will be in green for me today. Talking about the bad ones, Astra Microwave Products, the revenue was down around 39%. And the profits were down around 66%. Talking about Syntex Industry, though the revenue saw a big growth around 70%, margins took a hit of around 800 basis points, leading to a PAT decline of around 37%. So red for me on these 2 stocks. Back to you.
Okay, always some green, always some red. That's the market. Thanks so much, Sonal, for that. Quick recap then of our top 10 list this morning. Stocks expected to gain are BEL, Axis Bank, Shriram Transport, Shriram City Union Finance, Bharti Infratel, Tata Global, Dwarikesh Sugar, Meghmani Organics, Lakshmi Machine Works, Balaji Amines and Allicant Castalloy. Stocks that could see some pressure today include Tata Steel, Lupin, IDFC Bank, IDFC, LIC Housing Finance, Central Bank of India, Astra Micro and Syntex Industries.
What's the trade setup this morning? Well, a bit soft on the SGX Nifty, but these days even that's good for the bulls because almost on a daily basis you are seeing the market ending in the green. Now, the Asian markets this morning are also a bit of a mixed bag. So let's see how we move from here. In fact, more red than green, but not by much. Hang Seng just about 0.1% lower. Ashwani Gujral, Mitesh Thakkar join us. Sudarshan Sukhani will be with us in a minute. Good morning, Ashwani. Your thoughts on how to approach trade today? It's been good going for the bulls. Do you see some consolidation now?
Good morning, Anuj. See, it's been good going for the bulls, but only in mid-cap and small-cap space. While Nifty, Bank Nifty optically look up, but if you start a day with 140-point premium and end it with a 60-point premium on the Bank Nifty, if you bought futures in the morning, you didn't make money. Similarly, on the Nifty, there was a 35-point premium at the start, which came down to 20, and the Nifty hardly gained 15 points. So basically, the futures trader, for him to make money, people need to be trapped. So my sense is the big trade on the index may not be on the upside now because chances are 99% of the people are long. So for a day trader, I need momentum, energy. That I'll probably get if we start breaking the lower end of this band, which is about 24,950 or say 10,350 thereabouts. So that way, doing these 20-point Nifty moves, I don't think adds a lot of value to, my capital.
So you will short below those levels, Ashwini?
Yes, in case the market is unable to show follow through, or if we do get some amount of bad news, etc. Whenever people get trapped, those 4 or 5 sessions will give me much more money than this limping up move.
Okay, well, maybe the crude price is going to help you. Let's see. The market is not worrying about that $61 just yet. It's above 60. Let's note 60.83 at this point in time. So that's almost $61. Good morning, Sudarshan. What are your thoughts on trading the Nifty?
Yeah, good morning, Lata. Well, we are long in the Nifty and the Nifty Bank, and I explained that we should be long yesterday also. So that trade continues. Now the markets are not doing anything, which means the bulls have not proved their strength currently. Markets have not gone up, but that's the way markets behave. Sometimes they are consolidating, and sometimes, for all we know, they may be getting ready for a decline. But in this market, it's much easier and wiser to be on the long side. So I'm long in the Nifty Bank. The only change we are doing in our trade is to tighten our stops. So the Nifty stops should now be 10,300 and 24,700 for the Nifty Bank. So if the markets show any willingness to go down, we'll get stopped out. But I'm not taking a short at that level. Be long with these stops.
Okay, fair enough. Mitesh, then let's get your view as well. Are you still going with longs on the index as well as on the Nifty Bank?
Good morning. So on the Nifty Bank, I think I would take a long trade once we start getting past the important level of 25, 100, 150. And on the Nifty, we have been having long positions. I think now or today I would possibly look to book out, given the fact that we are quite stretched on the intraday charts, having run too far away from the moving averages. My sense is that we might see 2-3 days of consolidation between 10,280, 290 on the lower side to about 10,400 on the higher side. So the idea should be to buy towards the lower end of the consolidation. So in case we get a 40-50 point kind of a drop from here, maybe today, sometime tomorrow, I think that will be a fresh entry point. But for the time being, take profits from a short-term trading perspective.
Okay, fair point. Let's discuss individual stocks then. Ashwini, what's on your list?
See, today the particular focus is mid-cap, because mid-cap index, the next Nifty went up more than 1%. So Coromandel International is a buy with a stop of 510, target of 535. Granules is a buy with a stop of 136, target of 148. VIP Industries is a buy with a stop of 287, target of 303. Escorts is a buy with a stop of 765, target of 790. And Bata is a buy with a stop of 815, target of 840.
Oh, Bata again. Sudarshan's favorite is now becoming Ashwini's favorite. Sudarshan, your stocks?
Well, quite rightly, the focus is on mid caps. You know, because the index could remain in a huddle, and if it does go up, we are already there in the Nifty and the Bank Nifty both. So I start with Colgate. You know, Colgate had a mini bear market, big decline in terms of what it usually does. Okay. That decline seems to be stopping at a support level. I'm a willing buyer in Colgate, and if the trade is working, I would actually carry it. If this is support, then significantly higher levels could be coming. Two pharma stocks. I've been explaining how pharma is bottoming out. That process takes a lot of time. But for the short term, Dr. Reddy's and Glenmark are both giving attractive buying ideas. Dr. Reddy's is also already rallying, while Glenmark was in a range after that big decline for 2 months, and that may be coming out. So we are buying at the lows if we are right in Glenmark. Two pharma stocks and a stock that's hardly ever discussed, Grasim. Now, Grasim is alive and kicking and existing, and a very attractive pattern suggests that a significant breakout may be imminent. So we are buying in anticipation. There's a short sell, that is Pidilite Industries. It's a fairly bearish chart, and a short which should be only intraday.
Okay, so Sudarshan also going with more of the largish mid-cap, so to speak. Mitesh, let's get your list for the morning.
Yeah. So I have more of buy calls. I think stock-specific long trading is still okay with me. Balrampur Chini has had a good breakout in the last 1 hour of the trade yesterday. Intraday chart is positive. Buy with a stop below 164 for targets of 175. Similar setup on the charts of Eicher Motors. I would recommend a buy here as well. Keep a stop below 31,850 and look for a 33,500 kind of a target in the short term. The solitary sell call is on IDFC Bank, which I would sell with a stop above 57. Look for declines to about levels of 53. Just Dial is something which is buzzing nicely yesterday. Good price and volume action, a breakout above the 200-day average. This is a buy with a stop at 425. Look for targets of 470. And finally, SRF, which from support levels has reversed yesterday. Buy with a stop below 1675 for targets of 1760.
Okay. Ashwini, I just wanted your thoughts on PSU banks. Yesterday's move, at one point it looked like we are having a big rally, then the stocks cooled off. How would you approach this pocket now?
See, they are now buy on declines. Now, whether that buy happens after a correction, which could be a meaningful correction of 40% rally, probably needs a 10% correction. But at some point, these stocks will move up. There shouldn't be any mistake about it. You know, the initial rally is basically taken out 2 months worth of rally in a single day. So sometimes these consolidations can be painful and long, but I think Bank Nifty has more support today than it had 2 weeks back, just because PSU banks can at any point rally, which they were not doing earlier.
Okay, let me get another set of stocks from you guys. Sudarshan, Which are the weaker NBFC stocks? I'm asking you because higher inflation because of higher crude prices, and incidentally even higher veggie prices, at least in Mumbai over the last fortnight, is inimical to the health of NBFCs, as is the strength of PSU banks. So, I mean, is there any weak link in the NBFC space? Anything you'll short?
And surprisingly, the two high flyers are both weak, and they're actually suggesting short opportunities. L&T Finance and M&M Finance. These have jumped, they have rallied and gone up 200%, and they are the weakest of all the links.
Okay. Same question to you, Mitesh.
Yeah, I think I actually have been bearish on both the Bajaj twins for some time now, last few days, and Bajaj Finserv. My belief is that is the weaker of the charts. I would still sell that with a stop above 50-50. I think 4650, 4700 is the area where the stock will head towards.
Ashwini, you detect any NBFC where there is a short trade?
See, NBFCs are in a bull market. So if they are going through a 10% correction, that is part of the bull market. So I am more interested in buying, a bull market leading sector than trying to go short out there. So people should be careful that after that initial 2-3 days where we saw a lot of selling, like L&T Finance, etc., they hardly dropped. It's still at 200, 202. So you may find buying from quarters which wanted to get into these stocks but didn't. So you could be against the mutual funds and the big guys if you try to short the NBFC.
Ashwini, just a question on the whole crude play. So if there is a bit of a tailwind on stocks like ONGC or maybe even Reliance, I mean, is that worth a trade? And what would be the next levels, let's say, for RIL?
See, I think the oil trade is the best trade because, ONGC, OIL, etc., nobody has them. Nobody had a positive view. So I think OIL, ONGC, Reliance, for other reasons also, will continue to make new highs. I think resources are doing very well. So metals and oil probably will give you much higher return than the domestic stories, which are kind of stalling.
Fair enough. Thank you, gentlemen. We are, of course, going to come back with a lot more questions, but we have some important corporate...
Yes, absolutely. So let's address the corporate developments surrounding Reliance Communication. Now, the debt-laden company's lenders have approved the telecoms firm's debt restructuring proposal, which they call a zero loan write-off plan. That's Arcom's own wordings. Post the debt restructuring, the new Reliance Communications will be sold off. The company has also claimed that Reliance Jio is interested in acquiring some of its assets. Kritika Saxena caught up with Puneet Garg, the ED of Reliance Communications, and began by asking him about the details of this restructuring plan.
I think the way you look at in terms of timeline for conversion, the reference date for SDR, which is governed by the RBI guideline, was 2nd of June. And the end date for that is 28th of December, by when the lenders have to convert the equity. Of course, it could happen much earlier than that, but that's up to the lender when they want to do during this period. They can do it any time.
But what was the conversation that you had with lenders so far as to what timeline they are looking at for the equity conversion?
I think each of the lender has to go to their board and go to the sanctioning authority and take their sanction. And some, the foreign lenders, Indian lenders, both are involved. So all of them have the different timeline. But we believe we will do, much ahead of the deadline, and sometime in December. The company is targeting in, December first week, but I would say it could happen anytime between that and 28th of December.
Okay, you spoke about 17,000 crore rupees repayment. March 2018 is a comfortable timeline to be able to bring that. I don't want to go to the details, you've already specified that, but 17,000 crore March 2018, is that a realistic timeline? And if you were to extend that, how much longer would that take?
Okay, so as per RBI guideline, we have time until December 2018, but management team is targeting to achieve that, the whole monetization program 9 months ahead of the deadline, which is by March 2018. And management team is pretty confident to close all the deals and, getting cash during this period.
To clarify again on the point that you had made in the press conference, that essentially means that after the entire SDR process is done, Anil Ambani and the Reliance Group will be moving out of the telecom business. Am I correct in that?
I think the way I would clarify, the RBI guideline requires on conversion that banks have to get 51% a change of control and change of management. And I think we would be complying to that guideline, and banks will be finding out, and together with the management team, a new buyer for that. So obviously, ADA would be part of the public shareholder once the change of control takes place.
So where does Jio come in? Since you took Jio's name, and I know that there is an NDA agreement, so I wouldn't want you to go into the details, but does Jio come in here in the spectrum trading and sharing bit, or does it come in later when there is a 51% sale by the lenders?
I know, we also love Jio as much as you love Jio, But I think when we look at the Jio, we have a spectrum sharing arrangement, and we have separate, several infrastructure deal with them. And I think we look at it that they would be obviously, interested in that. Like in tower, they are the largest user of that. Yeah. So I think where they would come is we would come to know as the process is going on, and I'm sure you would also come to know as we report to you next time where we are and who the winners are.
Big story this morning is the $12 billion proposed merger between IDFC and Shriram Group getting scrapped. Both parties have failed to find common ground on valuations. But for us, the important question is, where do the stocks go from here? And we have Digant Haria of Antique Stockbroking joining us with his take. Good morning, Digant. Well, what would you do now with IDFC at around 60 rupees, already down from 66, as Anuj was pointing out, and IDFC Bank? First, how would you approach these two stocks?
I think IDFC has been, they got the license in 2014 along with Bandhan Bank. Bandhan could build a good liability franchise, but IDFC failed in creating a great retail franchise, and which is why they have been scouting for opportunities. And then the Shriram Group deal was, one of those opportunities which they were looking at. So I think after this deal, their struggle for building a retail franchise still continues. And yeah, I think they will continue to remain lackluster as they have been for the last 2-3 years.
Good morning. But how much of this is already in the price? So do you think the stock needs to derate more and go back to its previous lows, before this rally started on that deal?
No. I don't think so. They've hardly rallied even after the deal announcement. So whatever had been rallied, they've given up all the gains. And see, these stocks are trading pretty cheap, one and a half time book. So we don't expect anything major derating. But yeah, whatever upside and positivity was built in, I think that slowly gets unwound in the next few days or maybe a few hours. But yeah, we're not expecting a calamity in any of these stocks.
Around the time the deal was, the exclusive talks began, I thought IDFC went as low as 56. 55, 56 was where it was finding support. And then it did go up to 65. It has come down to 60. So do you think 55 is where it goes to? IDFC Bank, I agree, did not show any movement at all. But we must pull up a 6-month of both the charts, IDFC and IDFC Bank. IDFC did show some gains, some of which has gone off. So is 60 or 55 likely on IDFC?
I think it should settle. It's very difficult to pinpoint that range, but I think that those 60 to 55, maybe those range. That's the range where things are more likely to operate.
Okay. And what about Shriram City Union?
Yeah, these two stocks have been absolutely under pressure since the deal was announced. So I think the deal getting called off, the biggest beneficiary will be Shriram Transport, and second in line would be Shriram City Union. So obviously we see a lot of upside in both of these stocks.
So Digant, that's exactly what I was asking. I think last 1 month it became clear to the market that Shriram Transport, whatever the contours of the deal or no deal, Shriram Transport should not be touched as an entity because it's such a well-performing stock and company. The stock is already close to a 52-week high. How much more would you give it? Is it a buy for you? Do you have a rating, coverage on the stock?
Yes. We have a rating, and it's one of our top picks because the point is the CV cycle, the commercial vehicle cycle has picked up very, very strongly in the last 3 months, especially after GST. The used truck market has again become alive and kicking. So I think the biggest benefit is Shriram Transport, and we think there is still a 15-20% upside because now the fundamentals can play out. The fundamentals were completely being bogged down because of the deal. Now the stock should react to its fundamentals, which we think in the next 2-3 quarters should be pretty strong.
Fair point. Digant, thanks a lot for your quick take. I totally take that point on Shriram Transport, the CV cycle. I mean, see the rally in a show clearance from 80 to 121.25.
Should pull up the Shriram Transport maybe 1 year or 6 months. It's not just the deal, it's quite clearly a fundamental move.
Oh yes. Anyway, let's move on and discuss one more stock of the morning, which is going to be Tata Steel. It missed street estimates. The European businesses struggled for this quarter. We have Ritesh Shah of Investec now joining us. Ritesh, good morning. Your thoughts on Tata Steel's numbers, and what should be the strategy for investors? If there is negative reaction, should that be used to buy?
Hi, morning. I think Indian operations operating metrics was exactly in line where we and Street were at. Europe operations, as you highlighted, there was a bit of a disappointment. However, if one factors things with a lag, I think it will actually play out in the forthcoming quarters. Lastly, to answer your question on should this be an opportunity to buy if there is any dip, certainly yes. We have increased our target price to 895 rupees and we still see 25% upside on the stock.
Ritesh, that's going to be a factor of largely higher volumes, or is it also going to be a factor of stronger prices? I mean, what's the breakup, or maybe a mix of both?
It's largely a function of better prices, because if you look at the spreads, they have expanded for Indian operations. So domestically, you had steel price increases in July, August, September, but most of the increases happened in August and September. So the full benefit of that will be realized in the forthcoming quarters. And that's predominantly the reason why we have increased our estimates for second half and next fiscal.
Well, since we have you with us, Ritesh, do you also track JSW? JSW Steel, that is, what are the expectations today?
So we are looking at around 3,000 crores of EBITDA at standalone level and around 3,200 crores of EBITDA at a console level.
Ritesh, since we have you, I mean, on a side note, obviously, all this NCLT business that's going on, the stressed steel plants and companies, in case Tata Steel or JSW were to sort of snap up one of these lenders, I mean, will that at all alter your positive view? Do you think there's enough, depth in the balance sheets for them to amalgamate one of the stressed plants?
I think the management of both these companies, they're cognizant of the balance sheet ratios. Specifically, if you look at Tata Steel, it did come up in the conference call yesterday as well. They have multiple growth options right now. One is you have Tata Steel Tyson JV, which is an ongoing thing. Secondly, they have optionality on the KPO expansion, which could be 5 million tons. And thirdly, there are assets which probably they have bid for domestically. So there is a pecking order which the management definitely has in mind, and they will actually act on it, but it will be definitely subject to the balance sheet ratios. So the managements are cognizant of where the balance sheet is. I don't think so. Capital allocation is a concern either for JSW or for Tata Steel.
Okay, Ritesh, thanks a lot for your quick take on Tata Steel today. Talking about steel and commodities, Manisha is just telling us that LME volumes are highest since 2015. So let's go across to Manisha for some more update. Manisha, good morning.
Morning, Anuj. Thank you so much for that. Well, yes, the LME volumes definitely are picking up, and with the kind of run-up that we have seen in this quarter and the previous one as well for metals, you have seen the money managers and hedge funds come back attracted to this sector, and you have seen that money being deployed into this sector also go on at a multi-year highs there. But there is so much of global cues coming in right now. The Bank of Japan monetary policy meeting just about ended a few minutes back, and while their economic assessment has not changed, the price risk is skewed on the downside as the view coming in from there, and that's the reason you saw the Japanese yen decline and the US dollar strengthen. You also have the US Fed meeting kick-starting today. That would conclude tomorrow, so that is yet another thing to watch out for. The US Fed chairperson announcement will happen on Thursday, and you have the US non-farm payroll data coming in on Friday as well. So there's plenty happening in the global markets to take cues from. In the meanwhile, you also have the crude oil prices holding above $60 per barrel for a third straight day today. So that really strengthens its position on the charts. It is reiterated by various oil producers and experts as well that it's not just a rebalancing that you would be watching out for 2018, but there could be a deficit as well coming in for this space, because the US shale output, after increasing 13% year-on-year, now seems to be really plateauing, and the supplies in the global markets are declining. The demand, not just in Asia, but elsewhere, because of the global GDP growth on the stronger side. I mean, those are few cues that really seem to be supporting crude oil prices at these current levels.
Okay, you bring tough news on crude for us. Thank you very much, Manisha. We will touch base with you around 10 a.m. when the markets open. With that, let's move to the analysis of other stocks as well. We got a bunch of earnings yesterday. Prakash Dewan of Altamount Capital Management has joined us Prakash, good morning. Thanks for being with us bright and early. Well, I wanted to ask you about Marico. Good to go for a bit more, that stock?
No, I think Marico is kind of having this dual challenge of competitive intensity as well as input prices going up sharply. So I think, and then given the fact that they have too many brands that they have just integrated, even the GST benefit will take a little bit of while for them to, in terms of market share changes and all. So I would wait before really plunging in.
Actually, I wanted to extend that question into the way the market is actually almost ignoring consumer companies this quarter. Lever was pretty decent. We had decent numbers from Imami, Marico. Today it's Dabur. Is it just a mindset change because people are too preoccupied with PSU banks and trying to sort of fish around other areas where stocks haven't run up?
So it does happen, so you do tend to kind of see some sectors getting eclipsed because the others have taken center stage, you're right. But, the consumption names are already valued fairly. So, there's really not too much of upside that you're waiting to kind of grab, and then you're not going to miss out if, let's say, you were to do it a few days later. So I think that this set of numbers are not disappointing at all. In fact, typically it happens, the first round is always very positive, but this time we expected much uglier numbers. That's not happened. So in fact, you didn't mention ITC. Now, out of the FMCG names, because it has the tobacco business all the time getting into that worry zone, I think ITC also looking at the non-tobacco contribution to the FMCG business is kind of, shaping up pretty well. So FMCG will make a comeback, but when people have forgotten autos and PSU banks and NBFCs and oil and gas.
Okay. Prakash, good morning. Two stocks. One, your favorite, which the market all of a sudden has started to like, EIL. Yes, and the other is BEL.
Oh yes,
how would you approach
the number. So let me talk about BEL. In fact, I was going to talk about that when Lata mentioned a set of earnings that have come through. And if you see, this was something that we were waiting for a fairly long time, and that is the fact that all the negativity in terms of all the expense loading that BEL had to face last year with the 7th pay commission hike is just finally kind of showing its way out. So there's nothing now to bother about. You look at the margin expansion, look at the EBITDA growth, it's significant. This is not something that happens, and there are no one-offs, which is a good part. So operationally they're getting into that, and now it's only going to be as 2019 comes, election machine, EVMs, all of that will kind of bolster the utilization levels. I think BEL is up for a very major run-up. EIL is, of course, thanks to crude at 60 plus, everybody getting a lot of money, wanting to spend on other than marketing. So I think it's just the beginning of a 3-year story where you could probably, this is a multi-bagger in the making. 10 years it's not done anything because it's consumer industry, buying customer segment was absolutely short of cash. Suddenly they find themselves with so much cash they don't want to do anything other than just expand. And then that's where the EIL is going to be a very major beneficiary.
Okay. What was your reading on Lupin? Because the street is so divided. I mean, there are a couple of outperform ratings coming in. In fact, I was taking a look. So CLSA outperform, MS outperform Citi, but CS and Jeffries have actually pretty low targets. So what was your reading?
So, what seems like have happened is, while we acknowledge the fact that the US market is where the difficulty lies, the challenge of pricing lies, and the management has not changed the guidance as well. So, so there's really nothing much that's changed on the ground. Whereas Latin America and the Indian market shares improved slightly for them, and that contribution, if that sustains, I think then people will get more convinced. So yes, the outperformance calls would come out, but the targets wouldn't get revised very aggressively, is my sense, for another quarter. And the important thing is that since there's no expectation, if there's any improvement in the US, environment for them in the next quarter, and I do expect a lot of large pharma companies to start benefiting from, as we go into January quarter, because for that new start of the year for the US, there are different pricing, that could come in. And my sense is Lupin could probably be a beneficiary, but it's still got to wait for another quarter before that happens.
Okay. Prakash, what about, let's get outside the earnings realm. Which are the, say, consumer companies that you would buy? I mean, irrespective of the earnings, I'm only looking at it in terms of a future bet.
So I think one of the best poised names that I can think of is global beverages. I mean,
course, yeah.
you not because of that long queues outside Starbucks, because that's it's coinciding with that and everybody started to talk about this thing. But one of the things that I particularly liked about them getting into was they started focusing on a lot of global vision driven metrics. So there's something called the UN Sustainable Development Goals, and they've been pursuing those very actively, and that will start putting them and positioning them in a very different space, and some of their brands which are global. I mean, it's a truly global company. Just because it happens to be residing in India, we kind of see it as a chai manufacturer and supplier, but otherwise it's getting into a lot of non-black tea segments which are very profitable, and then coffee and everything else which really matters. So my sense is this is a company that will actually truly be the first Tata brand which will be global, even beyond the impact of Tata Motors, which is just in certain markets, certain pockets with JLR, but Tata Global will truly be the first global conglomerate from the Tata stable. So I think that re-rating it's not expensive as well. So I would believe you'll see a lot of action there.
Okay, well, Tata Global, I guess people excited also because there's a lot of talk about whether it will become also the consumer-facing company for the Tata Group, with some more perhaps amalgamation of related businesses. But on that note, we'll take a quick break. We'll come back on the other side. We'll have the pre-opening rates for you.